Hey guys, what's up? It's Jay from Journal Transcript here. Today we're looking at two stocks, KO, which is Coca-Cola, and INKW, which is Green Concepts. Just a quick reminder that our content is intended to be used for informational purposes only, and it's important to do your own analysis before buying and selling an investment. We recommend that you consult a licensed financial advisor before making any investment decisions. And on that note, let's get started on Coca-Cola. So here with Coca-Cola, we can see that we're in a strong bull phase, and we've been in a strong bull phase for the past years. We can also see more strength in the stock from back in about 1998, where we came into a flag position in a downtrend. We broke from it for an upwards of 170% gain, which puts it in a position now where we could see a strong upside. And right now, we're looking at a midterm position where we could see about 26% gain for a 15% loss, which is a good entry to have, especially if you're just trying to get a quick swing trade, unlike the others that are buying Coca-Cola for the long-term position. If we look at the quick fundamentals behind the company, we can see that they have a strong PE ratio of about 29.68, and they have strong dividends of about 3%. We can also see that the average volume is way higher than our current volume, which also shows that a break could be incoming, as we've seen in the past. They've constantly outperformed earnings, and their revenue and earnings have been solid over the years, which is it's another good indicator that we're looking at a strong long-term stock here. If we look more advanced, we can see that they have a strong profit margin around 23% and a strong operating margin around 30%. We can also see that the stock is not heavily shorted, which shows the institutions will not be trying to mess with the stock at all, and they know it's a strong winner in the upcoming years. Now we're looking at the chart on INKW. This is an OTC stock, and we're looking at like one like this. We can see a strong potential for a rebound. And right now we're sitting on a heavy resistance at about 32 cents, and we can see a bounce back down or a bounce up. So there's two potential scenarios here that I could see. We break through our support here, and we fall back down to the 200 EMA, where we could see a bounce up to a 100 to 200% gain, unless we have a news barrier, which puts us at a way higher potential, maybe 1,000, 1,200% gain. It's a very high potential of that scenario. But another one we could see is actually bounce off the support we're sitting on now, and up to the all-time high of around 370%, and sell-offs on the way up around 100 and 200%. So this is a relatively decent play, especially when you're looking at a stock like this with a high upside. This is the kind of one that you want to be buying. So when you see a stock with strong technicals like we just saw with INKW, we also have to look at recent news and fundamentals. So what we can see here is that they've actually strengthened their availability to about 300 million new Amazon customers, which is a very good sign that the company is expanding and they're not sedentary in the market. We can also see that what they're basically trying to do here is reinvent the wheel. They're working with basic water bottles, which have been around for as long as anyone can remember. And they're implying pH levels, minerals. They're making the water bottles much more superior than the other competition around the market. So this is a stock I can see that has a strong upside in the upcoming years and eventually could become a competitor to the big brands. So that's my analysis on INKW and KO, which are both stocks I see that can have a strong upside in the upcoming years. Thanks for watching, and I'll see you next time.